Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the minutes of the last FOMC meeting were released today, and I think the question going forward is going to be, did the Fed just pivot? We'll talk more about that. In this recording, we'll be featuring the stock symbols that you see on your screen now. And remember, if there's a particular symbol that you're interested in, you can click right on it using the chapters feature in the video. With that said, let's take a look at the charts. At the time of this recording, it is late on Wednesday evening. As a reminder, the market is closed tomorrow in observance of the Thanksgiving holiday in the U.S. and only open half day on Friday, closing at 1 p.m. Eastern Time. Hey, if you like these videos, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we really appreciate it. All right, taking a look at the charts. When we look at the S&P, one thing that I qualify when we have a week like this is the fact that a holiday shortened week, low volume, and take a look at the volume. Even before we look at the charts, you can see anemic volume. This almost looks like half-day volume like we're going to see on Friday. A lot of times the market drifts higher. There's an old expression in the markets, never short a dull market, and that's a low volume market. And so the markets did move to the upside early part of this week with a little doji there on Monday and then up the past 2 days. And you can see we actually did move that wave 4 up to 76%, getting awfully close to completely disqualifying this 5-wave impulse pattern to the downside. Something really interesting in the world of Elliott Wave is if you look at the Elliott Wave long count, which basically looks at longer waves within the waves, you can see that it has a different count. Oftentimes they give you the same count, but here it's different. And you can see that it's showing that the wave 5 may be in. It's still highlighted, meaning that we could possibly make a new low, but as we're moving back to the upside, we could easily retrace back up to this previous 4 if we do get confirmation that that wave 5 is done. That's typical Elliott Wave. You finish wave 5 and you move higher. In addition, as we take that off, we have this zigzag pattern that we've been talking about, which gives us a targeted price all the way up around 411. And if we do make it up there, that would most certainly disqualify the pattern. You might be thinking, well, how in the world can we start to move to the upside with the kind of inflation that we have? Well, historically, as we know, the last PPI and the last CPI numbers both had ticked down. If you go back and look historically, when inflation makes a turn, it's been bullish for the stock market. So past periods of inflation, you get it tick down, the market uses that as an excuse to rally. So we can argue with how bad earnings are going to be next quarter. Are we going to get a deep inflation? But the technicals speak for themselves, and it's something worth paying attention to. If we look at the VIX with this move, as you would expect, moving down on this low volume, low volatility early part of the week, and we are nearing awfully close to that 20 level. We'll see what happens at the beginning of the week. One of the things that I've told our subscribers is that when you have these holiday short and low volume rises in the market, oftentimes when everybody comes back, like on Monday, you can get a reversal. And obviously, with Black Friday coming, all eyes are going to be on the retail sector with how those reports come in. And if it's disappointing, has inflation really affected consumer spending? If it's disappointing, then you could see a reversal back to the downside on Monday, taking away these gains. Perhaps we get a indication before the market closes on Friday, but likely not. Looking at the 10-year, interest rates clicking down, that's also fuel for the market to move to the upside, and we're getting close here to testing this 38% wave 4. That's a good fib level, but if we break that, again, bullish for the markets. When we look at the dollar, also ticking down, about to test its wave 4. So both the interest rates and the dollar ticking down, both of those are bullish for the market moving forward. So you can see there's kind of a case being built here for a potential rally into the end of the year. People have been asking me, is there a case for rallying to the end of the year? That's it. If we take a look at the Dow, right all the way up to this previous high, pretty amazing move. You have to be impressed with the Dow. And if it turns out that it was the market leader, boy, what a flashback that'll be, that the Dow really does matter. I mean, I know it matters, but you know what I mean. It's just been kind of the stepchild after everybody been looking at the NASDAQ and the S&P, myself included. But the Dow was the first one to relabel, something that we'll have to watch going into the new year. Looking at the Qs, a little bit of a bounce up, still underperforming, but bounced up this week nonetheless. Hasn't made it back to its previous wave 4. It could go up and hit the 61.8% level and still be in a qualified pattern to the downside, but as goes the S&P, I think it'll draw the Qs with it, even though it may still underperform until Fed makes a real pivot. I mentioned that in the intro with the minutes being released by the Federal Reserve. Basically what happened was a lot of the Fed governors expressed concern that the rate of rate hikes and the amount of rate hikes could have a real harmful effect on the economy. And so they said you can expect a decrease in the severity of the rate hikes soon, was their language. So if that happens, if they do start to decrease, it looks like the end is in sight, we could see some sort of a sprint to the upside in the Qs. That would be very helpful to the Qs. As we've talked about numerous times, rising rates, not a good environment for tech stocks, inflation either. So if both of those start coming down, this might be a place to be because it's been so underperforming. It may outperform, maybe a fight between the Qs and the Dow to see which one performs better. Looking at Tesla, well, we looked at Tesla. This is really interesting. And Tuesday night's TradeFinder last night. By the way, if you haven't attended a TradeFinder, it's every Tuesday night. We do it at 9 p.m. Eastern Time. It's free. You can register at the bottom of this video or go into our website, ewotrader.com. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. Love to have you. Sign up and join us in the next one. But everybody's up in arms with this move on Tesla. And as you can see, it's been pretty brutal. If we take the Elliott Wave count off, I wanted to show you this zigzag pattern, and we did our first zigzag mastery class tonight, the first session of 4 to come. And zigzags are one of my favorite directional patterns. They're everywhere. I know technically they're a corrective pattern, but they also move in direction. And you can see there's a zigzag in the C wave, but look at this big zigzag pattern. So you look at that close to the 38% fib level, you would expect a 61% C wave extension, and look what happened with Tesla. It touched it on the low yesterday. Not a surprise to see the big bounce back to the upside today. So the question will become, can we get back up to that 200 level? So what I was mentioning last night in TradeFinder is that before you can really start to consider being bullish again on Tesla, I think it's got to get back above that 200 level, because we could just be testing it once again like we did there back in the middle of November on the 15th. Looking at Coinbase, stocks of interest, you can see that moving to the downside as expected. Now with all of the Bitcoin that they own, Coinbase is kind of going to move depending on what happens with Bitcoin. And we'll look at Bitcoin right after this. Trying desperately to hold that 40 level, but you can see that we're in a wave 3 of a 5-wave down pattern. It needs to hold that 40, but we'll see again how it handles with what's going on with Bitcoin. I'm sure you've been inundated. You can't go anywhere without hearing the news about FTX and the fallout. And I just think that it's shaky ground until that starts to wane a little bit, until it's not in the headlines every 5 minutes. Pretty much everything crypto's been hurt with it. And as you can see, Bitcoin did make it down to that 16,000 level. We talked about if we couldn't hold up in this 20,000 level, that 16 could happen. Well, it has. It held that, bounced back today. And if we don't hold here, I think 12,000's next. But at least a little bit of a reprieve today. And we look at the 10-day moving average, we're still just a tiny bit oversold. So maybe even a little bit more of a bounce before we find out if Bitcoin can really make any sort of a move up. And so again, as Bitcoin goes, likely is going to go Coinbase. While we're talking about Bitcoin and crypto world, the FTX and everything, I'm curious of your opinion. What do you think about the crypto world? Can it handle this? Can it survive this FTX thing? A lot of people say it's going to come crashing down. Maybe it would have gone worse if it was going to. Leave a comment under here on what you think is going to shake out, is going to survive this, or is there more downside to come? Curious to your thoughts. Apple has a really interesting chart that I wanted to show you here. I know we're still in a qualified 5-wave to the downside pattern, but I'm going to take the Elliott Wave pattern off because you can see we're forming a nice triangle here on Apple. And when we look at the DMI, I'll show you the ADX is pretty low. And to me, triangles trump anything. A triangle can break either direction, and you don't want to get caught up trying to pick a direction by looking at the current Elliott Wave pattern. So I take it off. You can see that the ADX is getting down around 15, which is an area that you start to look for a signal that you could see a breakout in the not too distant future. And so that's a pretty decent size. It's about a 20-point wide mouth of the triangle there on Apple. So we could see a significant move in Apple in the not too distant future. Again, we don't know which way, but something's about to happen. Looking at AMC, we talked about this, where it's likely going to come down and find or try to find support around 5 because the aggressive investment objective institutions are going to have to sell if it can't hold that 5 level. And look at the volume. When you look at the volume, there you can see how the volume kicked in to support. That's what happens. The institutions don't want to sell. They don't want to take the loss, realize the loss, and so they tend to come in and support it and see if they can ignite some sort of a short covering rally. And so far, they got it back up to 8, so they're breathing a little bit easier now. But you can see that we're getting into an area of resistance once again in AMC. But they're only a wave 4 correction of 28%. But could go higher there, at least to get to that 38% fib level. I'm going to move back to the upside. I wanted to take a look at oil. A lot of people ask about oil, and I had kind of brought out the opinion. A lot of people thought oil was going to go higher, and it may still, but an alternative opinion is if there is weaker demand, and again, everybody be looking for Friday for indication there, that could bring, supply and demand always will matter, and everybody focus on the supply part with what OPEC's jawboning about cutting supply, etc. But if we do have a significant recession, then and spending goes down, that could be the catalyst to move oil lower. And so far, it's made a bit of a break. We had a false breakout there to the upside, as you can see from this triangle, and we've turned and gone to the downside. And that's why we do a lot of strangles with triangles at EWOtrader.com. And one of the things that I always caution our subscribers on is to be careful that you don't take one side off. If you buy a call and buy a put, cover both directions. One side breaks out, don't be so quick to take that put off, because these false breakouts do happen. And so you can get caught if you take one off too early. Looking at GLD, we had that nice move to the upside, but it got a little bit vertical. You've heard me talk so many times about how I don't like it when things go vertically up, because they often come vertically back down. So we had the gap and run up, and so we came back down. We've held the 10-day moving average, and the wave 5 there at the 61.8% level means that we probably are going to get this move in gold back to the previous 4. That's what's supposed to happen with Elliott Wave patterns, as you know. So we should run up to about 168, and then we'll find out if we have a new impulse going or if that's going to be the end of it. We'll see what kind of a corrective pattern we go into once we actually do get there. Looking at the international markets with Australia, news here is we broke above 23. Been sitting there for about a week, but it was able to get above it, and now we're at that previous wave 4. So what's going to happen with the Aussie market? It's done what it's supposed to do, a perfect 61.8% fib level on the wave 5. That ended. You go back to the previous 4. There it is. Now we'll find out if we're starting a new impulse move out of the Aussie market in the next couple of trading days. And then with the EWC, came back down to 34, the Canadian market, and it's likely marching its way back up to these previous highs here around 36. That's going to be its area of resistance. You can see a little bit of a zigzag pattern going on right there, starting here on this low. In fact, I'll just go ahead and draw it in for you right there. And just so happens that the 61% extension, which the 38% B wave correction, is awfully close to that target that I just drew there of those highs around 36. Taking a look at India on the INDA, nice move there. Got back to 44. That was an area of resistance. Pretty quick move. Did a great job holding 41 here. Pretty quick move from 41 to 44. We thought that was the area it was going to go to. Didn't necessarily think it was going to get there that fast. That's pretty impressive. But when you take a look at the 10-day moving average, you can see we are below the 10-day moving average. The good news is it's held above the 50-day moving average. So after that nice run, a little bit of a pullback, not unexpected, and we'll see if the INDA can mount a little run back to 44 and see if it can break above it this time. But again, pretty impressive move there. As you know, we take the Elliott Wave pattern off there. It was disqualified, and you can see that's what happens. And it ran all the way back to the upside. Last but not least, Hong Kong. A lot of you have been asking about this. And with the EWH here, we had this very vertical move here, this big quick run in the wave 4, all the way to the 61.8%, and then boom, just hit the ceiling there at the 61.8% fib level, and then it's pulled back a little bit here. So we'll see if it holds in this area right around 19. If it can hold there and turn and go back to the upside and potentially disqualify this pattern. But right now it's a really good looking wave 5 pattern to the downside. So we would have to get back above 20 to disqualify that, and you have to respect that fib level and the construction of the pattern until it shows us something different. Hope everybody enjoys the holiday weekend and look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.